Hi everyone, my name is Morongo Mosetli and we are finally at the last video. We've looked at financing through debt, we've looked at financing through equity, but now we need to discuss the actual lifeblood of business funds, your working capital. Working capital is a fancy term for current assets minus current liabilities. It's what I own right now for the next 12 months minus who I owe for the next 12 months. It's the money I have for daily operations. Normally, we would find working capital in our balance sheet. Our balance sheet would give us a list of current assets, for example, our bank account, our petty cash, any stock we still have at the end of the year. If we happen to prepay some expenses before they actually fall due, that actually also is part of our working capital. All this money is money we have. Some of it we have to sell something first in order to have the money, but it's money we have available right now to pay for our other expenses like rent, printing and stationery, salaries, and anything else that may come up. Now, your current liabilities, on the other hand, which we want to avoid, are things that you owe to other people. For example, if you spend too much from your bank account, you will happen to have what is called a bank overdraft. This is a negative, which means you owe the bank money, but not on purpose in the same way you would with a loan. However, because you owe the bank this money, it means it's a current liability. It's the same as owing BPC money for electricity. This is called an accrual because you didn't pay for the electricity you already used, and BPC is just going to keep waiting for you to pay them. Eventually, if you don't, they'll do like other people and cut you off from power or cut you off from water or whatever expense it is you are going through. But this money, it is what we use for everyday things, and we don't want to be in a situation where we have a lot of inventory and no money in the bank account, because that means we first need customers in order to pay our expenses. Similarly, we don't want a situation where we've prepaid all our expenses and then an emergency comes up and there's nothing available to be able to cover it. And this is why working capital is actually the lifeblood of your business. It's what creates the cash you have right now to spend right now on the things that you need. It's the way you avoid a loan, to be quite honest, and it's the way you make sure that every month there's something available to cover rent, printing and stationery, water and utilities, and anything else that you have to pay for your business that you can't avoid.
Financing through working capital would entail me using funds that are within the business or internal, that are operational, rather than seeking debt or selling shares. So an example would be me in my business, Global Governance Group. We have this product, which is a book that I have authored called The Corporate Governance Companion. So working capital in essence would be us using the proceeds of sale from this particular product such that we can then finance other aspects of the business such as electricity for further printing and salaries. So in essence, we're using internal day-to-day operational funds as working capital to fund operations.
We have statements that you can download to make sure that you are keeping track of your working capital. Click the link below to find our balance sheet, our income statement, and our cash flow statement. And then go back, revisit our previous episodes where we talked about all our other financial topics, and then stay friends with money.